Hi everyone, this is Jadu from Property Framework, and today I want to talk about a common dilemma that first time investors or new investors face, and that is whether to invest in capital city markets or regional markets. Now, most investors I come across, the ones who are starting out, always want to invest in capital city markets. Their impression is that capital city markets is where all the action happens. That's where the population growth happens. That's where all the economic activity is taking place, and that's where automatically that there will be price growth. However, I think regional markets also have an important role to play in your portfolio. Now, personally, if I'm going to invest, I wouldn't really mind whether it's a capital city market or a regional market. All I would care about is the next 5 to 7 years. Is this market going to give me growth or no? Whatever market that's going to give me growth, whether it's capital or regional, I would head into that market. And therefore, for me, the most important thing is the timing into the market. Getting in the market at the correct time. I wouldn't really mind if it's a capital city market or a regional market. However, now let's look at some points between capital city markets and regional markets. And if you're a first-time investor, you'll find this useful. So I hope the points that I'm going to talk about now would help you make a decision between capital city markets and regional markets if you are going to invest. Okay, so the first one, the price points. In almost all the major capital city markets, except probably Perth, you'll find that prices are above 600K, maybe even Perth and Darwin, I would say. So if you're going to invest in a capital city market, you'll need more than 600K, and except for these two capital cities, of course, Perth and Darwin. And therefore, if you don't have that, then you can't invest into that capital city market. Whereas in regional markets, you can invest as low as $300,000, $300,000, $400,000. That's where typically where you can invest your money. And I'm not talking about regional markets which don't have growth, have slow growth. These markets are poised for really strong growth over the next 5 to 7 years. So you could enter into regional markets at around 300 to 400,000. So an advantage when it comes to that price point. Point number two, rental yields. Now, in almost all the capital city markets, again, except Perth and Darwin, you'll find that rental yields are typically very poor. You'll find 3, 4, and the max you might get is around 4.5. Okay, Perth you'll get around 5, 5.5, and even Darwin is high. But then all the other capital city markets, the rental yields are typically quite poor. Whereas if you just come into a regional market, it's very common, especially in markets in regional Queensland, for example, to get 6% or 6.5% or even 7% rental yields. So rental yields are always usually much better in regional city markets than your capital city markets. Now, I know the big question that's in your mind. How does the growth profile of regional city markets look as compared to capital city markets? Now, if you want to look back at the 30-year period, let's just go into and look back at how the regional city markets have performed relative to the capital city in that state. And look at it over a 30-year period, and that'll give us more insights about how these markets have performed over the long time frame. So let's get into that. Now, this is the growth profiles of the capital city market compared to the regional market. And I'm looking at the period between 1992 till 2022. And we're looking at different states. So the first one is NSW. This is Victoria. This is Queensland. This is South Australia. And this is Western Australia. So let's start off with NSW. Between 92 and 2002, Sydney grew by 111 percentage, whereas regional NSW was by 50 percentage. Okay, so you can say Sydney did quite much better than regional NSW. Between 2002 and 2012, Sydney only did 32%, whereas regional NSW did 43%. So regional NSW actually did better than Sydney between 2002 and 2012. Between 2012 and 2022, you see that Sydney has done 98% growth, and regional NSW also has done 98% growth. So in this case, you can see that from 2002 till 2022, regional NSW has actually performed better than Sydney. Now let's look at Victoria. Between 92 to 2002, Melbourne grew by 95 and regional Victoria was by 50%. So there is a considerable difference there. Between 2002 and 2012, Melbourne grew by 69, whereas regional Victoria grew by 59. So you can see the gap is closing between Melbourne and regional Victoria. And between 2012 to 2022, Melbourne did 69 and regional Victoria did 76%. So that is, to me, this is showing that regional Victoria is just improving over time and the growth profile is getting better and better. So, and in 2012 and 2022, that period, regional Victoria outperformed the growth in Melbourne. Now let's look at Queensland. 92 to 2002, Brisbane did 48, regional Queensland did 39. For the next 10 years, Brisbane was 74, regional Queensland was 67. And then 2012 to 2022, Brisbane was 71, regional Queensland was 59. So you can see regional Queensland is not too far behind Brisbane. They're quite similar in terms of the profile. When Brisbane does well, regional Queensland also does well. When Brisbane doesn't do too well, then regional Queensland also doesn't do too well. Now, South Australia, Adelaide did 55% between 92 to 2002. Regional South Australia, 44%. 71% here and 68%. 72% and 47%. And even here, I still think regional South Australia is following the profile of Adelaide. When Adelaide does well, regional South Australia does well. When Adelaide doesn't do too well, then the growth profile of regional South Australia also slows down. Now the last one is Western Australia. Between 92 to 2002, Perth did 73, regional Western Australia did 60%. 2002 to 2012, this was the time that Perth boomed, Perth did 104%. But look at this, regional Western Australia did 116%. So regional Western Australia actually outperformed Perth during that time frame. So you can see that there are periods where regional markets are outperforming the capital city markets, and even when they don't outperform, the gap isn't very significant, especially after 2002. You're seeing that the gap between regional markets and the capital city markets isn't very significant. Okay, so why is this happening? Why is the growth profiles of the regional markets improving? The first thing for that is interstate migration. So there has been a lot of migration that's been happening into these regional markets, and it's not only a COVID phenomenon. It has been happening much earlier than the COVID occurrence. So interstate migration has always been happening, and then that's why I want to share the next chart with you. Long-term migration trends between 2004 and 2020. So the green one here reflects interstate migration into Queensland. So that means migration into Brisbane, a part of it, and then also migration into regional areas in Queensland. And you can see since 2004, that has been quite steady. It's been like 20 to 30,000 people moving into that region every year. It dropped during 2012 and then it started picking up again. And again in 2020, region Queensland, migration into Queensland has been very strong. Typically, this means that there's movement into areas like Brisbane, and also the other popular areas are Sunshine Coast, Gold Coast, Fraser Coast, lifestyle locations. But more recently, the trends have changed to areas like Townsville, Mackay, Bundaberg because of job opportunities, affordability, and the lifestyle. So you can see that there's a lot of movement into these regional areas. And the other one, the blue one, is regional Victoria. You can see this one is also recording positive migration, and that's mainly happening because of the movement from Melbourne into areas like Geelong. There was a lot of movement in from Melbourne to Geelong, and that's why the interstate migration trends there have been quite positive. Okay, so you can see two markets where interstate migration is really very strong. Now let's look at the more recent trends. So I'm showing this one shows the orange bar here shows the capital city net outflows, and the red one shows the settling in regional. So in the 12 months of September 2023, you can see 80% of people left Sydney, so the capital city. 80% of people who moved, they vacated the capital city, and 39% of that settled in regional markets, the regional NSW. If you look at Queensland, you can see 33% came into and settled in regional Queensland. Victoria, 21% settled in regional Victoria. Western Australia, 8% settled in regional Western Australia. If you look at the 12 months to 2022, September 2022, so that's 21 to 22, you can see a very similar trend. 61% leaving Sydney to, and 26% of that is settling in regional NSW. You can see Queensland again, 37% of people are settling in regional Queensland, 7% in regional South Australia, 23% in regional Victoria, and 7% in Western Australia. So you can see the migration into areas like South Australia and Western Australia is started to happen since 2020. The trends are starting to change now. There's more migration into regional South Australia and regional Western Australia as well. Earlier, we saw that most of the migration was into regional Queensland and regional Victoria. And now we're seeing the other states, interstate migration being quite strong in the other states as well. So the main reasons why these migration is happening is number one, jobs. People want good job opportunities, and if the regional markets offer these job opportunities, they're happy to move there. Number two, um, is the lifestyle. The regional markets have good lifestyle options by the beach, even tree change locations. So from a lifestyle perspective, these markets are very attractive. And the next one is the affordability. People are just find the capital city markets very expensive, and therefore they find a lot of value in these regional markets. So these are the reasons why this trend is shifting and why there's more migration into the regional city markets. And the next one that I want to talk about is that everything is actually quite relative. Now, while most of the migration, overseas migration, happens into capital city markets, and the regional markets typically get a smaller share of that migration. So that's the migration that happens into regional markets is typically the interstate migration. So that's a smaller share. While it's a smaller share, what we need to see is really the growth into the population growth into that area relative to the dwellings. For example, in a capital city market, there might be 1,000 new people coming into that area, into that market, but if there are already 1,000 homes available for them, that's not going to affect the dynamics of the property market. But in a regional market, let's say 100 people move into that market, but there are only 50 homes available for them, then that's significantly going to alter the dynamics in that market. So everything is relative. You need to look at the number of homes available compared to how many people are moving into that market. And the second one, infrastructure spends. Like, I do agree that there's a lot of economic activity. Most of the spending happens in capital city markets, but then while it happens in these capital city markets, it does not significantly alter the property market dynamics. Whereas in a regional markets, when you have a new hospital, when you have a new road or a new train station or new shopping malls, things like this significantly alter the dynamics in that market because there are job opportunities being created, the accessibility is becoming better, and therefore more people move to that area to take up these opportunities, and that creates pressure in the regional market. So infrastructure projects will significantly impact a regional market, whereas there might not be a massive shift in the dynamics of capital city markets. So everything is relative. You gotta look at these markets individually to really understand the forces at play. So that's it from me. I hope you found these tips useful. If you got any questions, feel free to reach out. Thanks.